I think everybody on this panel, just to see, has, everybody on this panel, maybe you can just introduce yourself.
Okay, also the company? Yes. Okay, good. My name is Tammo van Leeuwen, which typically sounds like a Dutch name, and that's what it is. I work for Sopra Banking Software. Quick intro on our company. Sopra Banking Software consists out of 5 software companies developing banking software that have merged together over the last 3 years. So the former partners of Sopra Banking were Sopra, the market leader when it comes to software for the banking industry in France. Calatai and Wouters, providing core bank services for the Benelux market and being the market leader in core banking there. Delta Informatique, which was the core bank provider for the French-speaking part of Northern Africa. Then we have Chato UK, which provides lending solutions and one of the leaders in the UK market. And last but not least, Core AG, which is a German company providing core bank service to Germany. Those have been merged together. We're now with 2,000 colleagues, and we're supporting about 500 banks in 70 countries. And this is not the end, this is the start of our ambition. The ambition is clearly to become one of the biggest players in the financial industry in Europe. That's not only because that's a nice ambition, but also because we see the globalization of our customers. In order to play a role in the financial market, it requires more investment, faster time to market, and a better geographical spread, and that's what we're aiming at.
Over to Nils, just a quick introduction, please.
Yeah, Nils Winkler, I'm the CEO of Yapital. We're building a probably disruptive payment service, which is hopefully not disruptive for the consumers. The interesting fact is that it's backed by Otto Group, which is one of the largest retail organizations on this planet, and also one of the largest organizations in supporting other merchants. As a leader in money collections and business intelligence, and a leader in logistics with Hermes Group. They're shipping like 1/4 of the packages in Europe. So that ecosystem is quite interesting for us, and we're definitely a non-banking company entering into this field.
Okay, and Mark, maybe just a quick intro.
Yes, I'm Mark Henkel. I'm the founder of Paymill. We are a payment service provider out of Munich. We're offering startups and small businesses an easy integration in online payments. Why are we disruptive? Because nobody else is caring about small mid-sized merchants because they don't give enough money for big banks. But I think if we have enough of them, that's a good business.
Okay, so let's kick it off. Maybe before I take my questions, does anybody have a question in the audience? Because I'd rather throw it out to the audience first, and if they don't, then I've got lots of questions. And if anyone wants to make a question, just put their hand up. So any questions from the audience? No, nothing. Okay, so let me kick it off by asking the panel, how do you think open innovation, what Gustavo talked about, is going to change the landscape vis-a-vis the large corporates interacting with the smaller entities and that ecosystem developing? And maybe we start with Mark, since you're in the sort of on one end of that spectrum, and then we can go to Kim after that, to Wim after that. Sorry.
I think open innovation is always the starting point for change, right? But I think what's very important is that you will not make change without the incumbents. So there come these small players like we come and other players and try to disrupt the market, but in the end you need to work with the players together in terms of making consumer surplus, because I guess you in the beginning you don't have enough funds and you don't have enough potential to really kick ass and kick off innovation. You're just the breeding ground, and then you need somebody else who helps you to spread it around. So maybe this is a bigger player or the community itself, but I think it's innovation comes from somebody who dares something, but then the incumbents need to somehow be involved in it.
Yeah, I'd like to build on that from my experience of working in the financial industry. When I go to conference and I look at innovation, new companies, new startups, I'm really intrigued by the pace of innovation by the new services. At the same time, I am surprised by sometimes the lack of understanding of the financial industry by those new startups. That's on one hand. On the other hand, when I look at innovation in banks, it's sometimes still inward looking, whereas they need to maybe talk more openly. BBVA, I think, has a good example of trying to facilitate that. Swift has also an inner tribe where we try to bring new startups on a stage and in a conference, and I think many institutions in the room here have initiatives to do that. So I think, building on your point, both the innovation, the IT side, probably need to understand, what they're trying to disrupt or improve on one hand, and the financial industry, the incumbents, I think, should be more open and embrace new technology and see how they can benefit from that. So I think it's a two-way street.
I would argue that, let me challenge you on that, I would argue that the startups not knowing is actually a good thing, because then they're not hampered by legacy. In fact, some of the best startups that we've invested in had, a couple of, Climate Corp was started by a couple of Google engineers who had no idea about weather insurance. It's just they built some interesting technology and we helped them with the business model. But had they come with a idea in their head, that they probably wouldn't have done what they did.
What I'm saying is that at some point in time, you will need to understand in which environment you are playing. So I do take the point that maybe you don't start with that, because then your mind is polluted, or actually you don't see the innovative step. But I think at one point in time, and I think it's maybe an illustration of that we have this chief compliance officer of Ripple Labs talking here today, because I think Ripple, to operate, also need to understand what is the game in compliance and what's the environment. And then I think also the regulators, not just the incumbents, but regulators as well, and I've seen in the UK, for instance, regulators actively going out and educating, providing information about what are the rules of the game, not trying maybe to educate the startups in how to innovate, because I think startups are very clever in that, but provide information and about what are the rules of the game that they will be eventually playing in, and I think that's useful.
I see Gustavo's dying to say something there.
No, I just wanted to say I'm an entrepreneur besides my work at BBVA, and I have to say that entrepreneurs, the things that they have never ever forget about customers. And big corporations, in some occasions we do. I have to say that they don't know about the environment you were describing in a heavy regulated industry as we are, but they do know about customers, what they need. So they're very, Clayton Christensen wrote about this 20 years ago in The Innovator's Dilemma. Big corporations struggle to find disruptive thinking and to think about things that they think they know and they don't know. Let's say we think we know, we don't know.
Well, I would argue the biggest issue with the financial services industry is that they've forgotten who the customer is, completely. And that's part of the reason we are where we are.
I would actually totally agree. Just to give you an example, the initial team of Yapital was guys coming from marketing, digital marketing, internet. I'm a journalist from heart who just happened to be in an online advertising company that does also digital payments for in-browser payments and things like that. We had nobody from the banking industry. That is know-how that came after, because at first, and a user experience expert we had on the first in the first team. And I think that's the reason why we managed to build something which is kind of non-standard. And now we're, I think, one of the very few products out there that's not dependent on MIF regulation, for instance, and that's a huge plus.
So Tammo, as somebody who provides solutions to the incumbent industry, how do you feel about what the rest of the panel just said?
You already can see that because I'm wearing a tie, and I noticed that people wearing the tie are serving the traditional industry, and that the other ones without a tie are typically more in the innovative part. Of course, working for, let's say, the banking industry, it would surprise you would say I'm very pessimistic. I'm not at all. What you see, I think, is that there will be a cross line. I think after crisis, a lot of banks saw that they needed fundamental change, and we see that in the IT platform. Where it was in the past that nothing could be standardized, everything had to build bank-specific, because the effort was in creating very interesting, differentiating products, we see clearly the mindset shifting towards we need to enhance customer experience, we need to simplify the products, we need to go in the omni-channel environment, and there's a clear understanding.
I just love that because, you know, that's what I love about banks, right? Banks think they all provide a different product, which I think is just awesome in just how far away from the truth is. Banking is a completely commoditized business. When are people going to wake up and learn that a current account is a current account? Just because it has a little bell and whistle on it doesn't make it any different from the other current account. It's actually the user experience which is entirely different, right? I mean, I don't know what's your view on that? I mean, we build all this infrastructure, and at Swift, actually, when we sit in those board meetings and somebody says, you know, one of the big banks, we said, why don't we have a standardized way of onboarding clients? And all the big banks say, but no, our onboarding system is so awesome and we spent $180 million on it, so I don't want to have a common one with everybody. But, you know, it's a commodity. So don't you think the future is in more utility-like services?
I guess so. What we see currently working on a project in a small country where 3 competing commercial banks decided to share the same instance of the software to operate their services because they see that there is no added value on itself in the services, but the added value should be in the customer experience, free up their means to invest in that part. So again, to come back, you're right, it is commodity. And I think the challenge of the industry is to add emotion to this commodity as all the other products do as well.
So maybe over to Maria, because you know, you're a big proponent of big data, and is big data a big differentiator in the future, you think, of banks? I mean, is that where they're taking it?
Usually big data is more like a marketing buzz. When you just connect, just predict next payment according to previous one, and when somebody buys Pampers, you provide him child food. But in general, big data in terms of really deep analysis of customers' behavior can predict for financial organization the moment when the customer will, for example, leave the service at all. But it's not a real-time process. It's a special service which could be provided with a big data factories. It's not an internal marketing instrument. But important thing which I think can be said here is when we shift the focus from the banking product to the banking customer, to the person, it will be more efficient to lay not on the big data, but on the behavior data. And understand that if, for example, we see the map, digital mobile map, and see that customer is driving to any point, we understand that at this point he needs to be parked, and propose him relevant parking payment service is not a big data issue. It's just absolutely clear behavior data issue. And it will work.
Yeah, that's lifestyle integration. We talked about that, you know, giving the product to, maybe Nils, you know, you guys run mobile payments, mobile wallets, and you know, how do you, I mean, because it's a big buzzword in the industry right now. I mean, where do you see that market going, and where's the future, and what's the advantage of services that are being provided?
Well, first of all, I've been on a panel like this at Wallet Wars, I think 2 weeks ago in New York, and I was there with a guy from Verizon and one from RBS, and the two of them had a discussion about who of the two would own the consumer data for a retail transaction, and I said, well, none of you does, because I go to the store to buy something from that store, so the merchant should own that data. And everything else is just a commodity to make it happen.
Well, I actually disagree with you. I think the consumer should own the data, but we can have that discussion in a moment.
I tend to agree, actually. What we do as Yapital is say we don't own the data. We handle it, but the owner of the data for a payment transaction is the two parties that take place in that transaction. And that's it. So we don't analyze it, we don't sell it back to the merchants, we're not intermediaries. And in that respect, we're quite different, but merchants appreciate that because the biggest fear, and that is actually quite obvious, is that they're being replaced or they're being reduced to just people filling shelves. And in that sense, I think it's very critical to find the right way to deal with data because it's power. That's the one thing. And I think it's actually a very big topic for us to make sure that there is diversity in the services and retail landscape, because that's what we want to deal with people. And if we give our data to just one party, that will disappear. So it's just one more aspect to that.
Yeah, maybe a quick question for Gustavo, because I always ask this question. Unfortunately, you're the only person from a bank on this panel. So when you look at transactional data that sits in your system, do you think that the bank owns that data and has the right to keep that data, or who does that data belong to?
What I would say is that we definitely think that there are means and assets that are better if you try to exploit them with a broad view, and that is why we expose some of the things that we have at hand for others to build things on top of that. That's the best answer I have. Yeah.
But if the data belongs to the merchant, or if the data belongs to the person, it doesn't help him. So I would say that data belongs to every individual, but you need to have the data at a common point that the economy has a surplus. Because what you need to see the data in order to lower prices, in order to make it easier to get payments, because we're talking about KYC process, we talk about AML and all this stuff, where big data is, I think, very important stuff, right? Where you can see this guy is similar to this guy, and then you can make risk adjustments on this. So it makes no sense that an individual, owns all the data, but of course the privacy problem is something else. But if you want to have an economy surplus, you need somebody who can treat, or who can use this data in order to decrease the costs for the whole economy.
Yeah, but yeah, absolutely. I mean, Google Wallet, for example, is offering a free payment service, but as an e-commerce merchant, you need to give them the shopping cart data. And I presume, like me, I'm pretty scared of that. So that means Google knows of everything I buy as well as everything else, right? Great way for them to make money by that.
You're scared of Google, not about the data. That's the point.
Well, it depends. I'm scared. I mean, I don't like my data to be, I should be able to choose who gets my data, right?
Are you German, by the way?
No. But I think a lot of people don't realize how dangerous that is, right? If you think in the long term. I see a lot of nodding heads there. So I think that's interesting. Okay, yeah, I think that's interesting on data. Maybe just moving on, and we'll take a little straw poll of the panel. So if you think about the next 5 years in banking, what do you think is going to be the number one issue, revolution, thing that banks are going to have to watch out for? And let's go around, starting with Gustavo.
Well, we are not going to move forward, because I do think that data-driven products are maybe one of the main drivers in that case. I definitely think that there are many things that can be done, not just from the bank's perspective. There are many other players defining frameworks to deal with this. Sandy Pentland from MIT is looking for a platform in which you can put data from, of course, banks, Telco, and others, and finding a scheme to make sure that there's a third trusted party that helps to handle with that. So there are many things happening, but the data-driven products, let's say, are going to be key.
Okay,
definitely.
Nils?
And add user experience to that, I would like to refer to an app called My Taxi in Germany, or Uber. That's not built because it's much interesting data there. It's built on a user need, a consumer need. I want to have a car when I need it. I want to have it quick, and I don't want to worry about payments when I leave this car. They solved that, and they're awesome. And I think it's business models like that. So the data behind it is a necessity, and we need to make sure that it's used in the right way. But the user experience is what really matters, and then we can build disruptive products.
Okay, so data, user experience, Maria?
As I know, in the end of this year, we will get new edition of PSD2 with a special status for third-party providers and special rules how they will manage information provided by banks about banking accounts, about history of operation. After that, I suppose there will be a split between serving of customer and serving of banking accounts. and we will get absolutely excellent service, financial related service provided by absolutely non-financial companies like social networks, like search engines, marketplaces, etc.
So this is that point about the stack being stratified and
Exactly.
people building on the top of the stack. Wim?
Well, actually, my point was also about the stack.
Okay.
And I think that what I see is that banks increasingly do not want to play the full stack. They are looking very consciously at which services make sense to them, which services are cost economical beneficial, and actually they might decide to exit some businesses just because the cost or the risk is too high. It's not a profitable business. It may not be a profitable customer segment, but they may provide that service in partnership with somebody that is innovative, that is able to provide that service because it is their business niche and they provide that part of the stack. So I think we'll probably see a more, it's like a puzzle of different pieces, but they need to work seamlessly together in providing that service to the end
in fact,
customer.
that's already happened. That's what's simple and Movo now because they don't have a banking license, right?
I think the future is also in finance more in marketplaces where you bring together people who need money and people who can give money. I think this is something which can obviously be something which is interesting in the future. And I also think that we will lose or we will get rid of so many people who win in the whole Forex process. It's not Bitcoin that we have one common currency, but I think there are too many players winning in this value chain, and that's not good for the economy. And I think this will change in the future.
Tammo?
Okay, we're focusing on 2 technology developments. Hopefully that will be the change for the future. We'll address them quickly. One already addressed, we developed a digital wallet platform, because I guess the success of the digital wallet will depend if we can combine multiple ecosystems in one digital wallet. Otherwise the customer will end up in the same situation right now, having 10 different digital wallets from every provider, and that will lose the added value. So we developed that, but then the possibility to combine it with an ecosystem. The other thing, and that will be challenging for all the new startups and new developments we saw, and that's to an issue with the current banks. What you see today is that, and we do a lot of direct saving banks as well, it's very simple. You create a fancy, good-looking channel UI, and you plug it into a servicing system. And the more advanced your channel look like, and the nicer the graphs, the better it looks. That goes well for simple products. It is my expectation, not only me, for a lot of people in the industry, that the next level of complexity will come on the moment your simple products start to turn into complex products, and your customer might be more demanding. What you see then, that the combination of plugging channels to servicing systems won't do. It's not enough. That means currently developing a whole new layer of software that will allow a business support, an economically support, cross-sell opportunities to take away the clear connection between channels and servicing, but come on with a thing we call today a distribution layer, an ugly word, with a lot of components. Tomorrow, if you're interested in my workshop, I will address which components you can find in this new development, but that will be, I think, the challenge for the new startups in the moment the business becomes bigger and complexer, and it will help banks to get more money and to get a better channel experience for their existing customers.
Okay, I'm going to read off, somebody put an interesting question up there, and let's be quick here. Do you agree with the statement that all banks are mainly in the business of avoiding bankruptcy? It's kind of an interesting one. Gustavo?
No.
Okay, no.
Actually, I don't know. I'm not a banker.
But you must have a view.
I think that increasing the capital reserves for them is probably a challenge, and then the profitability on the transaction business is going down, so they have challenges. But I would actually truly hope that banks are still kind of stable.
Yeah, I mean, my personal view is yes, because actually all these new business models, you need to completely redesign the back-end stack to be scalable at much cheaper cost, right? And if you can't, you're going to go bankrupt.
But that's a different story.
Right, but Maria?
Absolutely the same question was given in the audience some days ago in St. Petersburg International Banking Forum, and almost all of the audience was agree.
Okay, interesting. So there we go. Wim?
Well, to reiterate my previous point, I think banks are looking to avoid maybe not going bankrupt, because I think it is still a profitable business, but being hit, for instance, like BNP Paribas, which is a public domain case, by such fines that may wipe out the entire revenue that they make in a year. And I think that's the point about regulation. That's the field that you need to play in, whether you're a bank and you're a startup. And I think that's something to take into account, and I don't think it's only applicable to banks.
Yeah, but that's a problem about systemic institutions, right? I mean, systemically problematic, systemically important institutions too big to fail. That's a manifestation.
I don't think that banks avoid bankruptcy. I think it's governments.
Oh, interesting. So you're saying every bank is bailed out at the end of the day. So
Right.
great. So it's the
There
taxpayer.
are
that foots
enough
the bill.
governments who prevent
Yeah.
banks to get bankruptcy.
One-way bet, as they call it.
If you transfer that into continuity, I think it's the purpose of every organization to avoid getting bankrupt. So far I didn't think bank differentiate from others. And I do not, as far as I can see, I do not agree, because I see a lot of banks investing, proactively investing in increasing and helping to do the business in a better way. So I don't believe that is going to happen.
Okay, I'm going to ask a question. How we doing for time? One or two more questions. Okay. So about a month and a half ago, there was a bank in Kenya called Equity Bank. And Equity Bank did something pretty revolutionary. They actually became a virtual mobile operator and gave all their customers, 8 million of them, a SIM card. And where the customers didn't want to change network provider, they gave them a sticker that sits on top of their SIM card, which gave direct access to the banking services through their own network. And I think that's pretty revolutionary, because we all talk about the telcos getting into financial services, but this is the banks getting into telco territory. So I would love to hear the reaction of the panel to this. Gustavo, maybe start off with you.
Yeah. In fact, Africa is quite a special continent in terms of the telecommunications right there. So it's quite, I would say, the natural going just from scratch to mobile, and in this case, a bank from scratch to delivering their service in the mobile is quite different. The landscape in other countries with such a huge penetration and incredible ubiquity in terms of connectivity, penetration of smartphones and other stuff. So I would say that I didn't know about this company, but it's natural for that specific environment. I mean, it's a bank trying to deliver the service in the easiest way to make sure that it's convenient for his customers. So it's I don't have any additional comment on that.
I think that any company that is not constantly trying to reinvent itself and is also willing to eliminate areas of business that are no longer reasonable. IBM is an example for that, and no longer a computer maker. I think those companies will disappear. There's not a matter of bankruptcy, that's more a financial question, but reinventing yourself, that's, I think, key.
I'm afraid there are many pilots looking like you've described, and it's not something which is rocket science to develop and to create first time. But the key is how to attract mass audience to this user experience, how to make the person to use this instrument day by day. And I cannot be sure that they will be successful in this area.
I'm maybe a bit more skeptical on that. In banks' ability reinventing, I don't see Equity Bank, for instance, becoming the MTN of Africa. I've also seen telcos establishing or trying to establish themselves as banks or getting financial licenses, but I've not seen telcos really becoming a bank to the level of playing as a financial service. What I think,
But yeah, I mean, in Kenya, 85% of the population is on Safaricom and uses M-Pesa to move their money around.
sure, but I don't think we have seen that widespread around the world yet, at least.
M-Pesa launched in India, 3 million customers in the first 2 months.
And we might see more examples of that, but I do think completely reinventing yourself as a bank. So they are providing financial services, and what I do see coming back to the stack, the interesting model is that Equity Bank integrates with M-Pesa as well. And I think that's an interesting model. The M-Pesa, actually the financial savings product offered M-Pesa is by the South African Development Bank. That is the engine behind the savings product of M-Pesa. So that's a good example of the stack partnership between a bank and a telco.
Yeah, okay, well, we could talk about that, but there's an issue, obviously. The reason that Equity Bank did that was because of the Safaricom monopoly, and they were trying to block services to their services through the carrier network, right? So they were doing a vertical integration.
Indeed.
Opposite to the stack, by the way, but interesting.
Yeah, interesting. But I think at the end of the day, Equity Bank doesn't want to be a virtual telecom provider. They needed to do that in order to bring the customers into their financial services, which is the core of their business.
Which is the core, but that's same as Google, right? If you look at Google, all Google does is complement everything, or actually disrupt, like they disrupted voice or whatever it is, because they drive search revenue. Yeah, it's the same concept, but it's just taking the Google business model. Sorry, you were going to say something.
Yes, it's a good marketing approach, more or less, right? But nobody in Europe or no big bank will care about Kenya and all these countries because the people have no money. So let them be so innovative. They could have really good innovative ideas. They will never success in Europe.
Well, I fundamentally disagree with that. I mean, I think the business models that are being created in frontier emerging markets are the ones that are going to come back and manifest themselves in these markets because of the cost and scalability. They've been developed in a very low revenue environment. And if you can bring those models back here, like M-Pesa has now gone to Romania and will go across the countries.
But the consumer is completely different.
Yeah, the consumer may be different, but the consumer is going to use the same services. If you can deliver them a lot cheaper using that new infrastructure, then you're in a better place, aren't you? As an institution?
But that's what I said in the beginning. You need to take the innovative products and need to work with an incumbent. But as long nobody there is interesting for the big banks, nobody will change something in Kenya.
Well, okay, we could have a discussion around that, but we're seeing a lot of that coming into these markets.
If I can make a last remark, I don't know if you're aware of the experiments in Poland, where I think the third largest bank indeed incorporated with a telecom provider and doing banking service via the telecom bill. And that project goes really successful because they had difficulties getting the market share. And by working together with the largest telecom provider, they increased their market share dramatically. So for them, it was a very good way of building the market presence. And I think already 2 banks are now in this level of cooperation. So I see the developments going in that direction clearly for banks that want to get market share in their market.
Okay, I think that's all we have time for. So can you join me in thanking the panel and all their fantastic insight? Thank you very much.